where does it go at the peak of this cycle? I don't know. Again, I don't want to be hung by dicks online for all of this. Every time we go through these cycles, more and more people understand what the benefit is of Bitcoin. And now we've got 300 million people that have used Bitcoin and other crypto. The next time around, it'll be 1 billion people or 600 million people or whatever the number is. My guess is we don't know whether this government will last in the UK or not. But if it does, the UK will probably eat the US's lunch. And we'll see Coinbase, we'll see Kraken, we'll see Circle, we'll see everybody relocating to the UK. So we start with this big inflationary pressure. So the Federal Reserve then decide to hike rates at the fastest rate of change in all recorded history. And eventually that tends to lead to the kind of negative side of the business cycle. So that starts playing out. The forward-looking indicators start falling, suggesting we're going to go into recession, which everyone's been talking about. And a lot of people have been saying, well, what's going to break? If you raise rates this much, something's going to break. And eventually it was the banking system. And it's all a story, as ever, of too much leverage. What they're trying to do is slow the business cycle down, because that's how you get rid of inflation. Now, always at the bottom of every business cycle, whether it was 1990, 2000, 2001, 2008, 2020, always something breaks because of rates and a slowing economy. So that's just a function of what happens in a business cycle, much like there's a boom at the peak of the business cycle and usually kind of excess leverage and excess optimism. So I don't think they tried to break it. Now, it's coming out that, obviously the Fed kind of knew that the regional banks weren't great. We also know the pension system's a problem. We also know there's a number of things that can be a problem in this system when you've got a globally indebted situation like we've got today. The world has never been this far in debt, and no country in world history has ever been as far in debt as the US is as a percent of GDP. So it's problematic, but that's just a function of the business cycle. Okay, it's actually really simple. So there's two levels for what a bank is. It is the deposits that they have, that's what makes them a bank, and then it's what they do with the deposits, they invest them. If people are getting scared now because they saw Silicon Valley Bank and Signature Bank go under, well, we should just guarantee deposits in the system. Okay, sounds great. Problem is, it doesn't get rid of the actual issue. The actual issue is the rates are too damn high. So the banks can't make any money. So if they just guaranteed the deposits, people still go to Treasury Direct and get their 4.5% or 5% yields. So it doesn't stop it, slows it down somewhat, but it's still a huge problem. The only answer here, the only answer that they have is to massively cut rates, and I think 300 basis points plus, and also undertake QE and understand why this increasingly rapid digital issue has evolved. It came out of Occupy Wall Street, where people said kind of enough is enough. They then started coalescing online, and we saw that in Wall Street Bets, where people realized that together they could take on the system, and together that they could put the odds in their favor a bit more. So now, armed with the information of what I call the hive mind, which is this kind of mass of all of these smart people saying, hey, listen, we've got a problem here, let's do something about it. That also turns into a mob mentality. So it can happen so fast. So the whole world works at Twitter speed now. But we're in a very, very different world where information spreads instantly, and the hive mind can turn into a mob as soon as they sense fear. So you have to stop that, because that's the instantaneous death of banks. We saw that instantaneous with FTX. We've seen it instantaneously in the crypto markets. So the regulators need to deal with that somehow. FTX is a brokerage. They're supposed to keep customer deposits separate, and they don't have a right to use yours. A bank is in the business of using your deposit to make bets. And back in 2020, the the Treasury changed the rules and said you don't need mark-to-market accounting because the bond market had become illiquid. And that was okay, but it compounds this issue once depositors leave. So yes, there is a comparison that you took customer money and you made a bet. One is actually allowed, the other one's not allowed. There's also a lot of regulation about what kind of bets you can take. You know, we stopped the ability to have prop trading in banks. That went by the wayside a while ago. But FTX was essentially prop trading with customer money, which they shouldn't have done. Brokerage, you don't get the rights to use the customer funds. In a bank, people don't realize is you are the product. And that's very different. My view here is I got into Bitcoin. So assets will go up according to the balance sheet. I think the balance sheet goes up significantly, 30% plus over time. Therefore, the equity market can go up 60% in the S&P, maybe more. So new all-time highs in the next 12 months or so, maybe a bit longer. NASDAQ gets there sooner because of its relationship. Crypto moves very fast. I got into Bitcoin in 2013 because I lived the European banking crisis and obviously the financial crisis. But the European banking crisis was very similar to what's happening now. The local bank in the village that I went in went under and took everybody's deposits. They bailed them in. We had a run on deposits, liquidity issues. They were invested in things that were illiquid, which was real estate. Real estate market had come under pressure. Very, very similar. Too many small banks in Europe. And so Draghi backstopped the whole lot. So I saw this and I realized that there was no trust in the financial system, i.e. nobody knew who owned what when Lehman went under. And they were terrified of others going under because of the same issue, because the daisy chains of collateral are everywhere in this market. And then when you realize in a bank, you don't actually own your money. And people are now realizing that. And the Treasury and the Fed are like, well, we'll just pretend that it's okay. That drives people into this parallel financial system. I got into Bitcoin in 2013 for exactly this reason. Now, Bitcoin's relationship with the Fed balance sheet is really interesting because it goes up exponentially. So if I look at it versus M2 year on year or the Fed balance sheet year on year, it massively outperforms in the bull market and then pulls back when the liquidity comes out of the system again, but it keeps going up. So yes, I think there is a potential setup here for Bitcoin and the whole crypto market actually to be shockingly strong. Every time we go through these cycles, more and more people understand what the benefit is of Bitcoin. And now we've got 300 million people that have used Bitcoin and other crypto. The next time around, it'll be 1 billion people or 600 million people or 8, whatever the number is. And those people will have been awoken to the fact that there is another way out of this. Now, the issue is, as we all know, is Bitcoin is extremely volatile. So it's very hard to think of it in terms of, well, it's a wealth preservation asset because people's mind time horizon is too short. But if you hold it long enough, it does extremely well. It does better than the Fed balance sheet, better than any other asset in existence. But people get freaked out by the up and down move. But if they just zoomed out, they see it does a phenomenal job at opting out of the financial system over time. But, you know, maybe you need to keep liquidity and other stuff for when you need it, as opposed to the crypto cycle, which can be quite vicious. My view is the US understands crypto, understands that it is the answer to the future, but they need to throttle it because if you create the bank run on the entire system, then the unintended consequences are simply gigantic. That's kind of everybody losing their jobs, the entire system breaking apart, the entire system of the United States as being the world leader, or Europe, and all of this falls apart. They don't want that. So I think that there will be an ongoing war. And if Balaji gets across what he wants to do, which is get more people to move out of the system into the Bitcoin market, we'll see the pushback coming. But it happens very quickly because the mob is pretty fast, as we know. And the mob with a hive mind who's deciding, let's go to the parallel financial system, they can move really fast. So the government's going to try and stop it. But, you know, They do have, as Punk 6529 talks about, there is a freedom to transact here. You need the ability to do that. And if they go against that, then they're really trying to change the political spectrum entirely. And I think that the pushback would be so gigantic, but it is going to be a fight. You see, once the US screws up and misses an opportunity, the UK has the rule of law, the language, the ability for Americans to go and live and work there. It's a global capital center. It's connected with Singapore, the Cayman Islands, Hong Kong, the UAE, all of the places that matter. It has a broader relationship on a less aggressive policy. So my guess is we don't know whether this government will last in the UK or not. But if it does, the UK will probably eat the US's lunch. And we'll see Coinbase, we'll see Kraken, we'll see Circle, we'll see everybody relocating to the UK because it's an easy change to have. And don't forget, this is $1 trillion industry. It's $3 trillion at peak. What's it going to be at next peak? 5, 10 trillion, probably. In a global world, that capital's going to flow elsewhere. And then every pension fund, sovereign wealth fund, hedge fund, anybody else wanting to do business in cryptocurrencies will go to London, and they'll go to Singapore, they'll go to the UAE, they'll go to Hong Kong. That's the way the world works. The more contentious question is, who owns all of that Satoshi Nakamoto stuff? My theory has been from day one that this was a combination of the GCHQ in the UK and the NSA in the US that built this. I mean, I spoke to the Department of Defense several times over the years, and they don't know where Bitcoin came from, but they kind of are open to the idea that it came as a parallel system that was built as a just in case by state actors themselves, knowing that it's decentralized, but if they can play a central role in it, it's okay. So I don't know, maybe that's the stake that they already own. Who knows? So at a top level macro position, I haven't cashed out of a single penny of crypto. And all I've done is use the cycle when the liquidity cycle hits the long-term uptrend that started happening in June of last year to just add to my positions. That's all I've done. Now, there are some trading opportunities around like bonds, because I think bond yields go from 4% to 1.5%. So can you make money? Will you make more money in crypto? For sure. But people don't want the risk, and people are such dicks online about the kind of risk you have to run to do it, that yes, there's traditional answers. You could buy gold, you can buy bonds, you can probably buy technology stocks, or you can buy crypto. And you skin the cat any way you want it in terms of what risk profile. And I've talked about my risk profile is, I have income, I have assets that are paid for, so I can take more risk with the liquidity that I have. I haven't changed anything at all in terms of my asset allocation, apart from increasing it and using the leverage. So why am I doing this? And this is really important for people to understand. So I first bought Bitcoin at $200 in 2013. I went back recently and looked at it and thought, what happens if I just kept my original $200 in its original size? Because it looked like I traded it really well. I bought it here, I sold it here, and then bought it there. Problem is the heres and theirs were all higher, because I sold at 2,000 and bought back in at 6.5. I fucked the whole thing up. Really, if I just held it, I'd have made 5 times as much money. And then the real magic unfolded is if I'd used the liquidity cycles and bought them every time we've had that kind of M2 fall down, M2 growth fall down, global M2 growth, bringing it back to the long-term uptrend. Had you just bought then, i.e. the crypto winters, even if you just missed the low by 30%, maybe more, I still would have done over 20 times better. I've learned, many of us are having to learn how to trade a exponential asset that's in a logarithmic uptrend that is cyclical. But that's how I just deal with it now. I just use that simple framework. Is the adoption going on? And where are we in the liquidity cycle? And just use that. My general thesis is the market's going to be squeezier than people expect. So I think we probably get to 50,000 faster than most people expect. When that is it this year? Is it within 12 months? Probably. Don't know. And over time, we just keep the adoption curve and it keeps going. So, where does it go at the peak of this cycle? I don't know. Again, I don't want to be hung by dicks online for all of this, but over time, does it take out 100,000? Does it take it 250,000? Of course it does. It's just a matter of when, and the timing part is the red herring. If you've got a long enough time horizon, and the trend rate of adoption and the rise in the price of the asset over time beats all other assets, you're under no motivation to do anything else but hold.